everyone, good morning. You're watching Market Fatafat on ET now. This is the show where we get you a wrap of all the big movers and shakers in trade. I'm Mubina Kapasi. Markets, meantime, once again in the red. In fact, it's a triple-digit cut that we are seeing on the Sensex. Nifty too losing around 25 points. But let's bring on board our technical expert of the day. We have Mandar Jamsandekar from our research team. We are joined by Pranay and Samya. And before I get to them, let me also bring on board Ruchi Bhatia, because the divestment story continues. We at ET now have been top of that story. And Ruchi, now it looks like Coal India, that's where the government has its eyes out on.
Absolutely. You know, we at ET now have been on top of all the developments with regard to the government's mega disinvestment program. Now, we're given to understand that the government seems to be open to the idea of divesting about 3 to 5% via an OFS in Coal India in this fiscal year. This would mean a significant amount coming in for the government. Remember, even last year, the government had sold about 3% stake in Coal India. Currently, the government has about over 70% stake in Coal India, about 70.9%. I'm given to understand that the road shows for Coal India are being conducted as we speak, and this is also going to be imperative for the government in terms of their disinvestment target. What is, of course, quite interesting is that the government is seeking interest from various investors, and they will be hitting the markets as soon as they believe that the price for Coal India is right. At this point of time, we've seen, the markets also being slightly buoyant after the government has announced several reform measures as well, and the government is hoping to cash on that with respect to divestment as well for certain PSUs, and looks like Coal India is also very much high on the agenda for the government.
On its radar, but do remember, of course, this will not be the first time. In the past as well, the government has slowly and steadily been reducing its stake in Coal India. Thanks a lot, Ruchi, for that. Well, let's continue with the countdown. Actually, before we do that, how can we not have that big exclusive voice that ET Now's Nikunj Dalmia caught up with earlier? He was in conversation with Rakesh Jhunjhunwala, who gave his take on what, in his opinion, were two of the greatest companies in the last 10 years. Listen in.
You look at Indigo. I think the two greatest companies created in India in the last 10 years are Indigo and DMart. Now what Indigo did, he got a $6 million discount on a plane. You know, they say, I'm not sure, but they say there are a lot of commissions paid on planes. Right? So suppose 100 million this price, the plane generally sell for 40 million. He got because he paid a large order, he got a 6 million extra discount. He could have justified to anybody that I bought it for a good price. And the 6 million could be taken in Cayman Islands or any tax-free haven. But he bought that into the company. He credited it to the company. Instead of taking in as commission, right? He created efficiency. However, what has he done? Look at DMart. People can't believe the price at which he sells goods. Made by SSC past gentleman, my close friend. So what if you differentiate, you can create great companies here. I myself am a private equity investor. I am giving birth to some companies. I only think of 5 things. First is people. Patience. Because if you are impatient, you make the biggest mistakes. Right? Technology. Frugality. And governance. If I do these 5 things, I don't know why I'll not be successful. There is 10% drop in auto sales, or 15%. Dealerships are closing down. So what have you invested? What business model have you run? If in 15% fall, your business closes, what business are you running? What doom and doom are you splitting? You can't face what risk measurement have you done? So this gloom and doom is for those who have followed incorrect business models. You think of it all, CEOs, businessmen, if your turnover goes down by 15%, you close down. I can't understand. So I think what they have done is that they've bought car dealerships, they borrowed from banks and bought land. That is the reality. So this, now you tell me one thing, Gloomant, okay, automobile sales are low. I think commercial vehicles, there is valid reason. Because first, 15 to 20% faster turnaround time because GST, and you allowed overloading, right? Cars, you have taken up the cost of ownership to extreme levels. But I don't think there is such a big slowdown elsewhere. I mean, Flipkart and Amazon both are claiming they've doubled their sales on the Saturday. One or two other companies in which I've invested, September has been better than August. And they're very bullish about the festive season.
Okay, well, that of course was that big voice that we caught up with, and you can catch the entire conversation over the course of the next few days only on ET Now. But let's then talk about the other big news maker, and that is Yes Bank. The stock price has really seen a big bout of volatility, wild swings. In fact, after tanking almost 24-25%, it's been able to rebound another 24-25%, but still just about hovers around that IPO price of around 35 rupees. So Pranay, what's the latest?
Well, the management has clarified in the con call today after Tuesday evening that most of the promoter stake that was pledged with the lenders has been sold. Now, that was probably the biggest overhang on the stock, and that uncertainty is now gone. There was more information that came to light that other senior managerial personnel had also been selling the stock, and most of that is now done with. So therefore, they seem to be pretty confident, at least when it comes to the operational aspects, that whatever they had indicated previously, those stand. There is no further deterioration with the asset quality. Yes, they would be looking for capital to grow, but they are not in a hurry. And all those clarifications have helped the stock rebound by about 21-22%.
An exclusive story on Yes Bank. Allaying fears on Yes Bank's slump, sources said from the RBI said that there is no reason for investors to worry about the bank's stability. It is very much stable. My colleague Nayantara Rai has picked up the story. She joins us now on the phone line. Nayantara. No, okay, I think we've caught her on a bad line, but essentially RBI sources have said that Yes Bank is very much stable. The there is a lot of rumor mongering. Of course, there's Rana Kapoor's pledged shares which have been sold. That has led to the slump. In fact, Rana Kapoor's stake is now below 1%. But yes, there was a lot of rumors with respect to the crash in online banking as well in a lot of these banks, but Yes Bank wasn't alone in that. So anyway, that's RBI sources. We'll try and reconnect with Nayantara in just a bit. Okay, now let's talk about autos, because we do have that last trickle of September sale numbers that were released. Mandar, first, I want to get in your opinion on the bounce that we are seeing in the entire Nifty auto space. What do you make of this?
Good morning. See, first positive thing is that on the long-term chart, the recent downfall that the auto sector has witnessed in the last 1.5 years, that has managed to find support at a very good important level, and this level of 6850 was important because this is the same level from where the Nifty auto index had bounced in 2016 and went up to make new highs. So recently also the index has found support at that same level, so that's a positive. Now the only thing is, on the short-term charts, it has a resistance between 8,200 and 8,500. So once that level is crossed, a change of trend would also happen. But till then, I think this resistance should be watched, and on the downside, one should also watch a support at 7,200 and 7,400.
All right, that's of course Mandar's view on the Nifty Auto. Now let's talk about those September sale numbers. Let's talk first about Eicher Motors. Unsurprisingly, there's been a dip. The Royal Enfield sales have come in at 59,500 units versus 71,662 units. So that double-digit decline continues for Eicher Motors Royal Enfield sales. It's a 17% decline this time around. The export figure, however, has done pretty well. But of course, its low base 1,600 odd units in the corresponding month. This time around, it's 4,600 units. And where we are also seeing a double-digit decline is TVS Motors. Soumya, how did they fare?
Well, on a YOY basis, Mubina, the sales were down by over 25%, but some amount of improvement on a month-on-month basis. They recorded a growth of over 9% in the month of September compared to what it was in the month of August. In fact, even on the export front, we saw a growth of over 17%. However, the YOY decline of over 25% is definitely not going down well with the investors, and that's why we're seeing the stock price react sharply and downfall of over 3% in trade today.
Right, another two-wheeler stock, Hero Moto. Pranay, how was the September sales for this one?
Well, the numbers were decent, but you would say that it's only a recovery month on month. YOY, the numbers are again down, like you mentioned, in double digits. But when it comes from last month, it's an uptick of about 12.5%. The management has also indicated that the forthcoming festive days are going to be much better for the company. And while YOY basis, they may not really match up, but the recovery could be one of the strongest in the two-wheeler space.
All right. Hero Moto is actually like more or less flattish, but with a bit of green seen on the screen. And Soumya, Tata Motors, another month where the sales have plunged.
Well, yes, in fact, this is a plunge of over 50% on a YOY basis to nearly 32,376 units. However, the stock price is definitely reacting very positively despite the fall and the plunge seen in the sales numbers on a YOY basis.
6% higher for Tata Motors, 1.2%, 121 rupees, one of the top performers today. All right, Mandar, let's talk about the IT space where the bounce continues. TCS is here in trade, one of the few gainers. Your view here?
Mubina, if you look at the last 6 months of chart in case of TCS, then you'll find that the stock has been trading range bound. On the downside, 2040 and 2000 has been a support, and on the upside, 2260, 2280 has been a resistance. So it's been trading in this range, and currently it's trading on that support level. So I think one should expect a bounce back from current levels. A swing, a long trade can be initiated. Stop loss for the trade would be 1950, and on the upside, profit booking can be done around 2160 to 2080 level.
All right, flattish in trade, that's TCS for you. It's actually given up those opening gains. All right, take a look at the RWI small case and see what that one's up to right now. Remember, the Nifty and the Sensex are slightly in the red. 35 points gone for the Nifty. What is the RWI small case doing then? Let's take a look at that. That will come up for you in just a bit. Remember, it's a composition of some of the representatives of the Indian economy. 543, and it's underperforming the benchmarks today. 0.6% gone. Quick break right here on the show. Do come right back for more. All right, welcome back. You are watching Market Fatafat on ET now. Let's just jump right back into that big Yes Bank story. It's a big bout of volatility, wild swings that we are seeing in the stock price in the last couple of days. But here's an ET Now exclusive. Allaying fears in Yes Bank slump, sources from RBI said there is no reason for investors to worry about the bank's stability and that it is very much stable. So Nayantara Rai joins us now, and hopefully on a better line. Nayantara, a lot of our viewers have been tweeting to us, emailing us about whether they should withdraw their money from Yes Bank or not, all of these sort of questions. So what exactly do your sources at the RBI tell you?
Yes, I do hope I'm on a better connection, perils of live television and bad mobile networks. But having said that, I've spoken with senior members of the Reserve Bank of India, and my sources in the regulator are saying there's nothing for depositors for consumers and investors to worry about when it comes to Yes Bank. The thrashing that you've seen in the last 5 trading sessions is being blamed on rumor mongering, where the regulator has off record said there is no question of Yes Bank being merged with any public sector bank. There has been one major bank, a rumor that had been doing the rounds. As far as the hammering down of the stock price goes, a lot of that, my sources in the regulator attributing to the action taken on Rana Kapoor, the founder's pledged shares. So much so that the bank, I believe, has informed the regulator that post the action on the pledged shares, Rana Kapoor's stake is now below 1%. It's around 0.75 to 0.8%. So that's something else to be watched out for, and that's perhaps the biggest reason you saw that 24% crash on Tuesday. But what the regulator is obviously concerned about is the fact that there is so much rumor mongering which is being seen in the market. Having said that, there's nothing to worry about, reiterating that the capital adequacy norms are all being met by the bank. Now, the new management has done a good job in painting the true picture of the asset quality. That had been a concern about Yes Bank, but the new management has taken care of those concerns according to the regulator, has shown commitment to turning around the asset quality. So it has seen a reduction in the exposure when you look at a DHFL or an India Bulls, etc. And the bank is continuing to engage with the regulator and show its commitment when it comes to capital raise. It is committed to raising another $800-900 million. The big question, of course, in the markets will be when and at what price. If you have a share price of $30 a share, it's difficult to believe a capital raise is around the corner.
All right. And yes, in fact, we did have an exclusive conversation with Ravneet Gill as well, and he believes that there's no reason why Yes Bank would not be able to raise adequate capital. Thanks a lot, Nayantara, for that. Well, very quickly, let's continue with the countdown with whatever little time we have left. BPCL rallies for the 3rd straight day on the back of the entire news with respect to the divestment. We at ET Now, of course, have been on top of that story. We told you about how the government is scouting for foreign players as well, Shell, BP, Exxon. There may be roadshows as well by the end of October. Amidst all of that news, the rally in this OMC continues. Okay, Pranay, moving on. Indigo, what exactly is the latest when it comes to the promoter feud?
Well, you see that Rahul Bhatia, along with his IGE group, they have filed for arbitration in the London court against Rakesh Jhunjhunwala. Though in that, the company has clarified that they are not really looking, Rahul Bhatia is not really looking at any monetary claim, relief or any kind of penalty against the company. So that is something which comes as a relief. But if you look at this topic, it will continue to be there in the headlines and as an overhang on the stock for some time.
All right, moving on very quickly, Mandar, Hindalco, this stock continues to be in the red. What exactly are you observing on the technicals?
Not much. See, the stock is range bound between levels of 210 and 170. So at current levels, it will trade more or less flat. Not much of interest in this stock right now.
All right. 3% gone, not much interest. But unfortunately, with that, we're out of time. So, Mandar, thank you for joining in and sharing your technical strategies. Pranay, Soumya, you as well. Coming up next is Markets at Noon.